So I'm going to first of all go into the Perth sale market and the rental market. I'll give you a quick update on both of those, where we're at, and compare it to where some of the other capital cities around Australia are at. I'm then going to focus tonight very much on established property. You know how I mentioned there's different types of property and different strategies. I'll be covering development more intensely in another event. I'll be covering building more intensely in another event. And tonight I'm very much focused on the established properties and the strategies that you can use with those, okay? So Perth sale market, I love watching the trend of things, and the most important thing is never to look at a small period of time, and the trend is the most important thing to observe. And you also need to look back at how it compares with the past, and a lot of what you see in the media I really turn off to, because it's like, oh, you know, the market's up this month or it's down this month. Like, a month doesn't really matter, to be honest, and they just use whatever they can in that month to write a headline and a story. It's crap. So what I'm focused on is overall trend, and this is the number of properties for sale, right? And you can see that back in 2013, when I started, tracking this every month, we were at 9,000 properties for sale. We're now at 14,650. So we're in a buyer's market now. We were in a seller's market then. So what's most notable when I look at where we're at in the market now is that we've actually, for the first time 4 months ago, started having lower supply than we had the same time the previous year. And why is that important? Because that shows that we're heading back on a downward trend compared to where we were. So we've definitely been through the worst, and it's now been confirmed each of the months for the last 4 months. You can see that we've got 14,600 on the market now, and we, at the same time last year, if I look correctly, we had 14,900, 15,600 odd. So we've got less, and at what we see, the seasons, there's more properties that come on in spring, there's more properties that come on in January, and then there's this ebbing and flowing. So most important thing to note is that we're down on last year, and I'll be watching very closely to see that this trend continues, but we're heading back the other way and have been through the worst as far as I can see. What also confirms that is that we've actually got more properties being sold per week than the same time last year, slightly more. It's not massively more, but it's certainly still more, and it's a number to be positive about. You can see how we've the overall trend has been completely down. The supply is always a leading indicator, and we need that demand to spike back up, and then we'll see the supply coming down by even more each month. So things like the first home buyers grant, which has just been increased to 15,000, things like our commodity prices that are starting to have been increasing month on month, giving more confidence to the market, more confidence to mining, making projects more viable. These are things that affect our demand side of the equation. So I started to get excited 2 months in. I'm more excited at 4 months, but the only way we know when we're fully corrected is that we start seeing it flow through to prices. So that leads me to the next part of that equation that makes me more excited, is that we had growth in a lot of our top end suburbs for last year, and it was the upgraders that were going into the $700 to $1.2 million range suburbs that took advantage of them being down, and they've upgraded into them. So what happens in any market when it starts to recover is that the growth always, and from what I've seen around Australia, this is the case, it always starts at the highest and most premium price points, and then it ripples down. As that suburb becomes too overpriced, people look for value in the neighbouring suburbs, and then it ripples out. And all my looking into the stats shows that the bottom end, in the Midlands, in the Armidales, in the Aurelia and Quinanas, they're struggling the most and have hurt the most in this period. So they've got the longest to go before they recover. And they're hardest hit in the economy too, because unfortunately, that's where it's suffering the most. So this year, there's the biggest winners in 2016 for units as well, and you can see it was a lot of kind of more blue chip unit suburbs like the Adderales, the Shenton Parks, the Apple Crosses, the Vic Parks. They've all held up pretty well and seen varying degrees of growth over last year. So if you just watched the news, you'd think that nowhere's grown, but nowhere's increased in prices, but this is quietly happening under everyone's noses. So what I expect to happen this year is the mid-price points will start to get more interest, and I think a lot of those areas are going to appear in another year's time on the top growth suburbs lists, and that's what I've already started to see anecdotally on the ground. Early stages, but. So Perth rental market, just quickly diving into this, it's a similar case that we've actually started to see a decrease. We've got a decrease down in the overall supply compared to where we were at in July. So I'm very happy about that. We've always get a little upturn in January because everyone comes on the market and it's our peak period. But given that we're now a fair bit down on where we were at in July, I'm much more positive about the rental market turning too. And the supply always leads the vacancy and prices, so our number for rent has to come down, then we have more competition and the vacancy will drop and the rental prices will start to stabilise. So I'm keeping a close eye on that as well, obviously, and different areas are affected worse than others. As I said, for prices, it's similar for rentals. The bottom end of the market has struggled the most. So, timing the property clock. I keep a very close eye on this. Hare & Todd White has got us approaching the bottom of the market. They're indicating that our southwest is at the bottom of its market. Interestingly, the Bunburys and the Bustletons and these areas have actually seen quite modest growth for last year as well. My parents happened to retire to Mandurah. Some of their suburbs around there have done exceptionally well. So they kind of did well in selling in Greenwood and buying there and timed it quite well. So a lot of people have been taking up bargains in those areas. A lot of people have started to retire, which is putting more pressure on those areas. And I think that's where the increase in demand in those kind of places is coming from. But for me, it doesn't make for a good long-term investment. It's much more risky being in the southwest than it is in Perth Metro. So units are definitely, by my account, trailing. They're still in a well-declining market, and that's why with all of my predictions and all of the things that I'm looking at, I'm focused very much on houses now to invest in ahead of units and higher density, especially with the changes we had to the R codes, which is having more high density flow into these suburbs, and it's going to keep happening for some time until it kind of really stabilises. So houses where you've got a land component, where you've got a detached villa or some land component to it, are definitely better to look at, and units will turn after the houses do. So the crazy thing, we get trapped in our bubble, and that's why it helps for us to look at Sydney, and we often run counter-cyclic to Sydney. And you can see that during 2010 to 2014, Sydney was basically sitting flat. And when we had our last boom across here, 2002 to 2007, Sydney again sitting flat. Everyone over there is like, are we missing out? What's happening over in Perth? A lot of the smart ones were over here investing. And now the opposite's happened. Sydney's had this crazy gain in the last, 8 years, and mostly in the last 4 years. Look, they've gone from 540 in 2008 to over 1 million now It's insane, you know. The money that people have made on the East Coast has been massive, and then they've started investing and flowing up to Brisbane, and that's where and their market's been more hot over the last year. And we've already started to get an increase in inquiries from eastern states investors only over the last 6 weeks. So that's another very good sign that we're relatively looking like much better value. They've made money in Sydney, made some money in Brisbane. They'll continue to do well in Brisbane over the next 12 to 18 months, and then it'll like flow like a avalanche around to us. And it'll be fun when it starts to continue to increase. So.